Hi guys, it's LSP. I just want to do a quick video regarding some thoughts and ideas on learning to trade, becoming a trader, side income, trading for a living. It doesn't really matter. What's important is getting things done, and going through the process of learning. Now, there's a lot of people online, obviously, that are teaching people to trade. Not my place to say good or bad. I don't know, but there's a lot of people out there. There's a lot of people that pay for these services. Great. Again, not for me to say good or bad. And there's a lot of services out there that are also free. Again, not for me to say whether it's good or bad. But what I do know is this: whatever you're looking at, whatever you're trying to achieve, whatever you're trying to to get to, or the end result, you've got to put the time in, and you've got to put the work in. There are a lot of ways to arrive at the same point in trading, obviously, which is a profitable trade. Okay, and whether that's fundamental analysis or technical analysis, a mixture of both. Whether you're trading stocks, whether you're trading forex, options, binary options, which I don't agree with. Commodities. It really doesn't matter. You're always going to be able to find somebody in any one of those asset classes, right, that's doing well. Always. Okay, it's a numbers game. There's always going to be people that are doing well, and then out of those people that are doing well, you filter them down, and you figure out which ones are consistently profitable, and they're the ones that you need to follow. They're the ones that you need to pay attention to. Now, the other thing I'll mention briefly is, again, there's a lot of traders online, okay, who claim to be good at what they do, who just take screenshots of certain things and they send them, they send them out and they show what they want to show. They don't really show anything else, and I'm going to put myself in the same category, right? And there's a reason for that. Again, I can't speak for anybody else. I just know me personally, when I put something out there, when I show a trade, I'll try and do it in a way that makes the most sense, okay? I'll, grab the trade, I'll put it on the chart, and so on and so on. I've shared my FX book links before in the past, showing trades that I've taken, live, verified. I've always shared the link, so people can do that. But besides that, there's not much else you can really do to convince somebody that you're doing well, or that you know what you're talking about. But there is a way to filter out people who are genuinely full of shit, okay? And the way that you do that is by verifying the information that they give you, okay? You guys have seen for years, okay, anybody that's been following on Twitter previously, before the the account was deleted and then I restarted it again, anybody who went through that period with me knows that I called the market pretty much most of the time. I think I got it wrong once on gold, as I've mentioned before in a previous video, but I still believe gold's going to 1375, and I'm going to maintain that until it gets there. But anybody that went through that with me saw I called the markets pretty much bang on every single time, okay? That's over a 2-year period. So you can't say, well, you don't know what the kid doesn't know what he's talking about. I do know what I'm talking about, okay? And this is not about me shoving my head up my ass. It's just about verifying the information that you see, okay? I've recently been back and forth with about 3 or 4 traders. I say 3. Well, one of them is, I'm not really sure. I don't want to say, because I don't want to badmouth people, but he's been giving me issues, problems. In the respect of, he's asking all this really stupid questions, and I'm trying to be as patient as I can, because I know what that's like, but he's not really listening, I guess. But there's 3 traders that I've kind of been back and forth with, and they're struggling with certain things, and ultimately, my advice has always been the same for all 3 traders. Guys, listen, focus on the higher time frames, focus, on your patience, your discipline, because trading obviously requires you to be on the ball all the time. Not sometimes, not maybe, all the time. You cannot sit in front of the charts, okay, and just kind of half be there. You've got to be there fully, completely, and you've got to allow price to do its thing. When you're dealing with weekly ranges, daily ranges, the shit takes time to form. The shit takes time, to reach certain levels and to give you the information that you're looking for. Okay, dropping down to the lower time frames to get more action isn't going to help you. You know what I mean? In the process of learning to become a profitable trader, it's not going to help. Using the lower time frames for certain order flow stuff, to kind of confirm a higher time frame bias, great, fine, whatever. But when you're dealing with lower time frames in the hopes that you see more so you learn faster, it simply does not work. You need to stay on the higher time frames. And my advice would be, if you drop down to a daily of any chart that you're looking at, whether it's euro, whether it's stocks, but it doesn't really matter, any asset class, okay? Drop down to the daily, okay, and just do some basic analysis, okay? You look down here and you see, okay, there's a low here. Great, so there's my low, all right? There's an area here of relief, okay? So price came down, it stopped, had a small area of relief, and then it dropped again. Okay, fine. So we're going to mark that off as well, all right? And I'm just going to keep this very loose and very, very generic in the respect of what you should, or what you could, not should, but what you could be doing, just to kind of give you some ideas on progressing with the daily chart and then dropping down to the lower time frames to look for an entry if it's there. Okay. There was a stop run up here. All right. So there's your stop run. You can see there was an old high. Price came down, took out the low here, came back up. And the reason that I'm not doing that one right there, okay. So I'll show you right now. The reason I'm not marking off this low, but when it went through it, is because it came back to it. That's the most recent stop run. So price went up, took out the stop run, and then we had a really nice reaction away from that, and we came almost down to the previous low. Okay, so this is the one that we have to work with up here. Okay, and that's it. There's really nothing else. There's nothing else that you really need to pay attention to. So you look at this stuff and you say to yourself, okay, there's still liquidity below here. There's still stops below here. Doesn't matter whether you subscribe to the idea, whether you believe the idea, whether you understand it. It doesn't matter. All right. Put yourself in the mind of a person who is controlling price, and you're saying, okay, I know there's people right that are long in this move here. Okay, and there's going to be stops below here. Okay, fine. Because I know this, because I believe this, so to speak, and price didn't quite get there. There's still liquidity below there. Unless it runs it out like this convincingly, there's still liquidity below there. Okay, so is there a potential that price could potentially be coming down here to take out this, these stops? Of course, it's still there, right? It may want to pull back first, so we'll wait. You have to wait. Tomorrow, I mean, if the candle finishes like this today, and then tomorrow comes and we get another expansive move higher. Okay, we need to see what the reaction is at this level here. Okay, there was already a reaction at this level before. Not the candles. Forget the candles. The price range from this candle's open to this candle's close. Okay, there was a price range here where price stopped, going down and started going up. Okay, so there was a reaction here. There was a reason price stopped here. Doesn't matter what the reason is, whether it's fundamental, macro, micro, mini, whatever. It really doesn't matter. What matters is that there was a price reaction here. Okay, so we need to see whether price reacts there again. Okay, so if we get some nice range expansion up into this area, we see. And it's at that point, once it hits this level, where we start to pay attention. We drop down to the lower time frames and we see how price is reacting at that level. Did it just rip straight through it? Because on the daily chart, if price gets up here and then we get a little bit of a reaction away from that, we're not going to know how that reacted away from that. But when you drop down to the lower time frames, you can flesh it out. You can look at the hourly and say, okay, it spiked up there. It didn't grind for that last portion of the third, slowly grind up there. It ripped up there and immediately rejected, okay? Both tell you something completely different. And so on and so on and so on. And then maybe we get a nice reaction from when it starts to grind lower towards these lows again. Okay, and the closer we get to these lows, the more likely we are to go through them, and so on and so on and so on. Okay, these are just generic ideas, guys. But you have to start somewhere. You've got to start with the higher time frame daily charts, and weekly charts, and you've got to put these levels on there, and then you've got to assess at the end of each day. It's no good just watching price like now at 10 past 1 GMT time, at PM in the afternoon. It's not telling me anything. Tonight, though, when the candle finishes, it will tell me more information. For all I know, tonight, 10 o'clock, GMT time, 11 o'clock GMT time, that sort of time, when we flip over into the next day, in terms of, like the next candle. For all I know, this might be completely reversed. We've got some news coming out in about 4 minutes. ADP, non-farm crap, whatever. I don't know. I don't keep abreast of this stuff. I know it's there, obviously. I'm aware of the news, but we don't know. The entire move might get completely erased and reversed. And then tomorrow, we're like down here, we don't know. We have to wait till the end of the day. This is a daily chart, okay? So there's some ideas, guys, and I know I'm kind of shouting a little bit and going on, It's all in, it's all in good fun, and it's all about, just putting some ideas out there for people to, to kind of take on board, and maybe glean something from. It's always been my intention. I've got no other, agenda, no ulterior motive. It's just, some ideas, some thoughts, and take it as it comes. All right, guys. So I wish you all the best. Try it. Do it for a week. Stay on the daily charts, higher time frames. And see what sort of results you get from that. And if you like that and you see that it's going somewhere, do it for a month. Do it for 3 months. Do it for 6 months. Not going anywhere. The market's not going anywhere. All right. So take care, and I'll speak to you soon.